This is a hard video to make. I mean, I've been a die-hard Skillz believer since the start, and now the future of this company looks more unclear than ever. News obviously isn't looking good for Skillz stock, as obviously the stock has gone down over 35% just overnight after Q4 results were released. Since then, the stock has actually recovered and it's gone over $3 a share again, but we are still miles away from that 52-week high. I've created a bullet point list for us to go over the goods, the bads, and the absolutely extremely ugly of this company, and I'm not going to sugarcoat any of it. So let's just get right into it, with revenue actually growing over 61% to $108.9 million in this quarter. That could be a good statistic if you didn't know that the sales and marketing expenses went up over 95% to $155 million. That's outpacing the revenue by a startling 42%, and that's only sales and marketing. That doesn't have to do with anything with research and development or general and administrative costs or anything along those lines that just push us further and further into those net losses. Now, gross profit grew to about $100.4 million, which was a 56% increase. But we also want, if we're growing the revenue by, let's say, 61%, we want that gross profit to at least grow by 61% as well, because that means that we have the same margin. What this is actually telling us is that our margin actually decreased by 3% down to a gross margin of around 92% versus our average, which is around 95%. So a little bit of a decrease, but this has to do with the consolidation of Arky. That being said, on the bright side, we saw paying monthly active user growth of around 56% to about 610,000 users per month. And on top of that, we saw about an average revenue per paying user of around an increase of around 3% to $59 per user. So that is part of the good news, but even that, it's a 3% increase versus a 50% loss on our net losses. Those are the main key four numbers, but I actually want to go through and look at all the other highlights of what they said for this quarter. Now, Skillz actually changed their 2022 full year guidance to only $400 million. Now, this is actually a 31% decrease from the $580 million that they were originally saying was their 2022 guidance. Well, that's a massive difference. And Andrew Paradise even said into 2022 that they're going to be no longer focusing on revenue at all costs, okay? So they're going to be scaling back. That's what they said, though. That's also what they said in Q3, that they were going to slow down for Q4, and we know how terrible that was. So I'm a little concerned for how we're going to do into the future. And they did also state, now that we have built a strong foundation of people, technology, and users, we plan to focus on driving efficiency in 2022, so we can drive more efficient growth into 2023 and beyond. So instead of scaling in like Q1 of 2022, like they originally said in Q3, now they're saying Q1 of 2023, a whole year pushed of what they were saying was going to be their growth year. That's my biggest problem here, is that the guidance can't be trusted, because in Q3 they said, we plan to be disciplined around our user acquisition marketing investments in Q4 and plan to prepare for scaling our investments in Q1 of 2022. So now that's completely gotten pushed back to 2023 now. So it's not much of a problem if what they say is actually going to come true. That could actually lead to some really good results. The problem is, and why people are so concerned, is this had nothing to do with what they said was going to happen in Q3 to what actually happened in Q4. Okay, and that's the problem, is what they're saying now might not actually come to fruition. They did, however, say that there's some pretty obvious catalysts for why there's like these low return marketing strategies that they have that are cannibalizing their profit generation. And they're going to absolutely cut that off and stick to their highest performing marketing strategies, which could dramatically change how much they're actually spending on their user acquisition marketing costs. Now, what I really think is going to either make or bankrupt this stock is going to be the idea that if they can keep their initial users right now without continuously pouring into sales and marketing. If high retention is kept and user acquisition costs lower, this stock will have to be bolstered up, because then we'll actually start to see some real profits. Remember that a 92% gross margin, even though it's dropped a little bit off the 95% mark, is still an amazing feat for a tech stock. Another really interesting tidbit, and this one I actually do think is a very big positive, is the idea that their user interface for their actual platform has not really been updated in 10 years since the business has been around. They say they're going to do a full overhaul of this user interface and make it a lot more modern. That's been my biggest problem whenever I've been on a Skillz game or using their product. It just looks kind of old, right? And so for the older audience that they have right now, it's not too big of a problem. But if you want to acquire new players in these sort of battle royale type games that are more leaning to a younger audience, then you're going to want a better interface. But we still have the NFL game to bank on, which supposedly will be coming out before the 2022 season, which Andrew Paradise still says is right on track to come out right before the NFL 2022 season. I don't know if it'll happen. Maybe it'll get delayed. We'll have to see. In terms of their other products and initiatives that they've been talking about, India was a huge one that they actually said, and I quote, "We are not planning to invest in the India product or content localization for at least the first half of 2022. To that end, we have not assumed any material contribution from India in our 2022 revenue guidance." Like, not any investment in India at all? Like, that seems like a massive flip from what they were originally doing from Q3. It's crazy how this all flips in a matter of just 3 months. Now, I know it's been a depressing video so far, but this will be the last disappointing point that I have to go on to before a little bit of hope at the end of this tunnel. So another part that I wanted to talk about was the loan, the $300 million loan that people were suspecting was going to be for, well, mergers or acquisitions. And then it actually came out that that $300 million was for, well, nothing. Nothing at all. They just wanted it for cash for M&A. If something were to come up, they could have the capital available. Who pays 10.25% interest to have capital on hand instead of just having the deal in the bag, say we'll get the money in a second, and then go and actually apply for those loans? It seems like a crazy management decision. I'm not happy about that because it's slowly just going to increase that cash burn over time, and that's something that we just don't need for our company right now. On the brighter side, there are some very cool things to look at, okay? Like mobile gaming total addressable markets have actually accelerated to about what people are thinking of about $160 billion by 2025. Now, obviously, we're not going to get every single player, but maybe we get between 1 to 5% of that player base to actually join the Skillz marketplace. That could be huge for the company, especially that it's growing faster and faster. Andrew Paradise did say that he wants to try to keep ahead of what's happening in the gaming space and actually try to, continuously be innovating on that platform. That being said, he's talking about metaverse development, also taking crypto as payments for their actual platform, or even use of NFTs in their games for 2022. I haven't quite made up my mind on this, but just thinking back from the Q&A that they had just a little bit ago, whenever they were talking about, well, we're not actually focused on the metaverse, we're more focused on like fitness products and these sorts of things as our next possible, outcomes. Now talking about metaverse, NFTs, and crypto payments just seems more of a cop-out to get retail investors more into the stock, but we'll have to see. They did, however, say that supply chain is going to be their biggest expansion for 2022. This, I do believe them, and I do think is very, very exciting. Meaning, aside from just user acquisition costs and trying to get people onto their platform, they're also going to try to be focusing on expanding through new games and partners. And that alone, if they can, get a big fish like an Activision, for example, will bring enough partners, or will bring enough new users onto their platform just because they're dealing with that company. Same thing with dealing with the NFL. You don't even need to acquire new customers because the NFL's brand name on it is free enough advertising for you to get new, users onto your platform regardless. They said that more of this will be discussed whenever it comes to March 15th, 2022 on Skillz Investor Day. So I'm actually quite excited about that to see how we're going to actually implement these things. But there are some goods and some bads here. Now, for my own personal opinion on this stock, what I'm starting to see is something like the case of an amazing product or opportunity where we have bad management. I think Andrew Paradise is something along the lines of what we're seeing with Peloton, where you have someone that actually has a great idea, but doesn't quite know how to scale the business the way they need to. I think what could really get this stock back into place is just that change of CEO role and someone that really knows how to scale a business long term. Keeping Andrew Paradise there for the amazing ideas and growth for the company, but the actual management decisions of the loans that they took out just needs to be changed. There are other concerns that people have with Skillz, although those aren't necessarily highlighted in Q4. If you want to see those reasons, make sure you guys check out the video right here. But if you could, make sure you guys like the video and subscribe down below if you want to see more financial content just like this.